Thanks so much for tuning into BQ Conversations. I'm Neeraj Shah, and it's an interesting time and an interesting year for energy markets, considering the pulls and pressures around one demand issues because of the Western slowdown, but a China reopening on the anvil, and at the same time, what OPEC is trying to do with supply. So lots happening, and therefore let me try and put two women who look at energy markets very, very closely on the spotlight to try and understand what is it that they believe could be in store in the very short term and the medium term for energy markets. Azlin Ahmad, editor, Mideast, Gulf and Asian crude oil markets, as well as Vanda, founder and CEO of Vanda Insights. Both of you, thank you so much for joining in at the outset. A very happy 2023 to both of you. Vanda, can I start with you? If Joe Biden was angry sometime at the end of third quarter of calendar 2022, some of the moves that the OPEC did kind of got justified because of the demand destruction. How do you view the pulls and pressures for oil prices in particular at the start of the year?
Hello, Neeraj, and a very happy new year to you and our watchers as well. So I think demand and global economy and economic sentiment very much remain in the driver's seat going into 2023. I think OPEC Plus will be more in a reactive, responsive position this year. Of course, they want to be proactive, and they've said that they will remain cautious and vigilant. I think what has changed probably is that while back in October, when OPEC Plus decided to slash their production target by 2 million barrels per day, the market consensus view was that they were probably trying to defend a $90 floor for Brent, which actually, they did manage to defend, if indeed that was what they were trying to do for quite a few weeks after their decision. But I believe going into 2023, while they will still remain on guard against oversupply and stocks starting to build up, they'll probably be willing to take much lower prices. And we've seen that sort of balancing act within OPEC Plus and OPEC throughout their history. When the global economy is not doing that well, they will probably not want to be that hawkish, for various reasons. Optics, of course, is one of them. But the other is that they do not want to deal a double whammy to global demand by maintaining prices artificially high. I think $70 per barrel is probably what they'll try and defend.
Mm-hmm. and well, Nigeria is on record for much higher, but it's interesting, Vanda, thanks for those inputs. Azlin, to you as well, the Western slowdown versus a presumably resurgent Chinese demand. What happens to oil naturally? And then what do you reckon OPEC does? Vanda believes they'll try and defend 70.
Well, we think that in terms of the oil prices, look, it's very hard to figure out and forecast where the oil prices are going to be. But the Argus consultants do feel that actually in 2023, at least in the first quarter, second quarter, the prices will probably be a little bit more or less steady, roughly around maybe the close to the 90 level, which is a bit higher than where we are right now. But because we don't think that the Chinese demand will actually recover until probably March, and the strength of the Chinese demand recovery will probably be felt more in the second half. So there could be stable or maybe a little bit of pressure on the oil prices in the first half of 2023. So it's hard again to predict what OPEC will do, but I think that there are a lot of moving parts. There's still uncertainty about Russia. So there's possibility that OPEC probably will just maintain what it's been doing and not make any new decisions, at least in the first half of 2023. That's what I think.
Azlin, what do you think is the biggest vector for oil prices or energy prices in the first half? Is it the Western slowdown? Is it, let's say for the second half of the first half, is it the Chinese demand resurgence that comes in post-March? Or is it the conflict that is ongoing?
Well, those are all very big things. I think that the bigger factor will be Chinese demand, because we have seen that Chinese demand was under a lot of pressure in the fourth quarter. So it's not going to recover immediately, not in the next 1 or 2 months, but it will. There's a lot of incentives by the government to boost domestic demand. So there should be some recovery. And I'm also assuming that they do get the COVID infections under control. So we think that towards the second quarter and in the second half of the year, that's when the demand should increase, which means that refining margins in China are stronger, allowing the refiners in China to basically increase run and increase imports. So that's how I think that the China factor could be the main determining factor on how oil prices move by the second quarter.
Okay. Vanda, juxtapose this with what happens if the Western central banks, scarred by the recent inflation readings in 2022, continue to stay hawkish at the cost of growth. And therefore, if the demand destruction is sharper than what is currently envisaged, that is a possibility as well. One doesn't know quite really. So if that were to happen, do you reckon OPEC Plus has in its arsenal enough ammo to still defend prices, or could the prices be at the mercy of what the demand patterns are in the Western world?
Your question goes to the heart of the Fed pivot debate, as what we've been seeing through the fourth quarter of last year, and remains with us, I think, for the next few months at the very least. Now, what you mentioned inflation, which has been quite stubborn. Now, the Fed pivot enthusiasts have been arguing that the inflation is starting to come down, albeit from very high levels. But because of the Fed over tightening, we might see such an extent of slowdown in the Western world that the Fed will be forced to pivot, which is to actually start cutting rates in the second half of this year. Now, I think whether that happens or whether the Fed stays the course as signaled by Powell quite a few times through the latter half of last year and definitely once again in December, I think that's going to be a major determinant of what happens to the global economy. If the Fed continues to tighten, I think we will, and inflation comes off only very gradually. I think the global economy is, obviously, we've also seen the IMF chief, Georgieva, warn that she expects a third of the global economy to be in recession this year. So as long as Powell does what he says he will, he has promised to do, I think the global economy is not taking off until next year at least. And in that scenario, I don't expect global oil demand to grow strongly either. In fact, I am a bit on the bearish side as far as global oil demand is concerned. If you just take the consensus view, let's say, of International Energy Agency, OPEC, and the Energy Information Administration of the US, they are expecting about 1.6 million barrels per day of year-on-year growth in demand in 2023. Our view is that it will probably be less than 1 million barrels per day. So I am on the cautious and bearish side relatively with regard to demand as well as with regard to prices this year.
Okay, $70. I heard you say at the opening answer. You reckon that's the average of sorts for 2023, Vanda?
Yeah, I said I think OPEC Plus will try and defend that as a floor if and when prices come to that stage. But on average, so 2022 saw the benchmark crude futures average in the high 90s, let's say between $95 and $100 a barrel, which is about a 40% jump year on year. This year, I expect the average to be closer to 80, I would say, so a good $15 to $20 below where we were last year. I'm with Azlin on sort of seeing this year as probably two different halves. It could be that the second half looks much better, partly because of, as the Chinese reopening stabilizes and the economy picks up speed. And then the second is, of course, if the Fed pivot theory does come out to be true, and the Fed actually starts cutting rates or at least turns to a pause to the second half of this year, the second half could be looking much better in terms of the economy and oil demand.
Okay, Azlin, final word with you. Of course, I hear you say that 90 is the average that you expect? That is part one of my question. But part two of my question is that if we work with a hypothesis that there is a demand destruction, whether Fed pivots or no is separate, but the Fed has done enough to ensure that there is a demand destruction, does the OPEC Plus alliance have enough ammo to defend prices, or do you reckon the playbook would be of lower prices because of a Western slowdown? I'm saying, assumed in my question is a hypothesis that there will be a slowdown and demand destruction.
Yeah. Okay. So in terms of the oil forecast, I'll have to looking at what our consultants did in early December. So that may have changed a little bit. They did predict that in the first half of 2023 will probably be prices will be just below 90, so around the 80 roughly, and then it will go up in the second half to about 92 to 95 range. So I don't know what they have for the average, but roughly I think we were predicting above the 85 level. Okay, I think that the recession is still the uncertainty on the market, but our view is that OPEC Plus has proven that it actually does have the clout to adjust upwards or downwards. And I don't know what price they would defend, but I think that if demand actually does fall quite significantly in 2023, let's say China still does suffer and the world does, suffer from recession, I think that OPEC will probably come together and probably will decide to and can decide to cut output further. So I think that we to some extent, maybe the market, and we underestimated OPEC for a while in 2022, in 2021. And I think they've sort of realized, they've shown that they will react, and they can react quickly, whatever the market is, whether to add supplies or to reduce so that the prices do not basically crash. So
got it. So viewers, 80 to 95, if at all, seems to be the base case. If it is 70, yes, it might be good news for India, but viewers, remember that will come on the back of a very dramatic slowdown in the world, which will not be good for almost all markets and all economies. So one hope that doesn't happen. But Vanda, Azlin, great having both of you. Thank you so much for taking the time out and speaking to us today.
Thank you.
Thank you.
And viewers, thanks for tuning in to this conversation.